对话全球顶尖机构，换一种思路看中国。大家好，欢迎来到中国基金报独家打造的高端访谈节目《巅峰对话》。2023年，全球经济展现出前所未有的复杂性。一方面，虽然美国经济整体放缓，但是经济却向市场释放了复杂信号。另外一方面，中国经济复苏，但是不同行业板块明显分化。在这样复杂的情形下，海外机构投资中国的思路是什么？中国在他们的资产配置版图中扮演什么样的角色？中资机构出海又能为我们带来哪些新的机会？今天我们请到了2位重磅嘉宾，他们会就上述问题展开讨论。一位是思睿集团的合伙人兼首席经济学家洪灏，另外一位是欧洲资产管理机构东方汇理研究院的主管和首席策略师 Monica Defend。我们先和洪灏聊一会儿，等一下再来连线 Monica。先简单的来认识一下洪灏和思睿集团。洪灏曾任交银国际研究部主管、中金公司首席全球策略师，并曾在花旗集团、摩根士丹利等国际金融机构的纽约、伦敦、悉尼办公室工作。思睿集团是国内一家新兴的全球配置投资管理公司，在全球机构拥有丰富经验的创始人创立。思睿集团于去年获得了瑞士著名的私人银行宝盛集团的投资。好，我们现在就来连线洪灏。灏总你好，欢迎来到我们的节目。首先请和我们中国基金报的粉丝朋友们打个招呼吧。
各位中国基金报的读者，大家好。
灏总，我们先把时间往回拉一点哈。在去年的10月31号，您发表了一篇研究报告，预测了中国离岸市场和在岸市场的史诗级的大反弹。那么在今年的年度展望报告中，预测了这个中国经济复苏不同的风险情形。现在今年已经过了快一半了哈，你觉得中国经济后续复苏的动力在哪儿？
对，进入了2季度之后呢，这个复苏的这个势能啊，它似乎是有所减缓的。那么这个主要还是因为呢，1季度哈，我们有一个非常良好的开端。那么2季度呢，其实我们也看到，就是说经过了1季度一个比较好的开局之后呢，房地产的这个复苏的步伐似乎在慢下来。那同时呢，就是说不仅仅是销售啊，因为销售其实它还是一个滞后的指标，它更多反映的是人们对这个房地产的信心，对吧？但更多的是呢，就是说，拿地的热情啊，然后那个卖地啊，这个卖地拍卖的这个情况啊，等等啊。那么这些领先指标呢，其实它显示了，可能呢，就是说对于开发商呢，对于这个房地产的板块投资的信心还是不足的。所以呢，我们也看到了，就是说到了4、5月份的时候呢，投资的同比的增长呢，也开始有所放缓，或者说它没有回复到我们想要的那么快吧。但是呢，在大家失去信心的之前其实呢，我们可以回顾一下历史上有一段历史呢，其实跟现在的这个市场的情况或者说经济的情况呢是非常相似的。那么2013年的时候呢，如果大家还记得的话，2013年的时候呢，因为我们对于这个房地产的投机等等呢，其实进行了一顿治理的那么当时呢提出的口号就叫房住不炒我们现在这个10年之后的房住不炒的这个口号呢，其实是当时这个2013年的时候提出来的。那所以呢，到了2014年的时候，因为当时的收紧的这个力度还是比较大的，所以呢，到2014年呢，其实你也看到，就是说住房的销售呀，投资等等呢，他们都增速都降下来，甚至呢这个销售它是变成了负增长，是吧？当时但是呢，经过了2014年然后再到了3季度的时候呢，我们就看到了央行开始降息降准就是连续的降息降准然后呢，我们也看到这个开行呢开始扩表的进行这个棚户区的改造，然后呢还再通过这个 PSL 这个质押贷款呢去补充这个系统的流动性等等等等到了2014年的4季度的时候呢，其实房地产就开始就有所转机了，它的这个同比的增长呢就开始从负变成正了。所以呢，当时就是说2014年整个房地产的市场的复苏它经历了3到4个季度那么我们现在只经历了1个季度半所以呢，其实我觉得现在我们要丧失信心丧失希望，其实还是为期过早。当然就是说我们也期望就是说一些对症下药的政策去帮助我们这个 整体的这个房地产乃至于整体的经济的复苏。
我来捋一下哈，因为房地产目前来看，从它的这个在整个经济中所占的体量和它目前对经济增长的拖累的效果来看的话，那既然它是一个主要的拖累因素，那么后续复苏的动力可能也是需要由房地产有一个比较大的改观。那么这个改观要发生的话呢，是需要信心有一个比较大的修复。那么货币政策或者是其他的这个像系统注入流动性的方法呢，是一个提振信心的一个非常有力的一个信号，你觉得可以这样理解吗？
可以部分这样理解吧，就是说房地产因为它占的比重非常大哈，所以呢如果房地产而且关联企业非常多，关联行业非常多，所以呢如果它不强势复苏哈，其实你这个经济它的复苏的这个持续性呢就可能就没有那么好了，对吧？但是呢，还有一种方法，就是我们这个就是在研究周期的时候啊，就是说周期它是一个指导啊，它不是一个金科玉律啊，不可打破的金科玉律啊。因为每一个周期的复苏，虽然它时间长度可能是一样的，但是呢，它的复苏的方式啊，也是有可能是不一样的。我们可以借鉴一下海外的经验哈。我举个例子啊，比如说海外的国家呢，在这个疫情之后，在重启了之后呢，其实我们看到呢，就是由于这个中央部门呢给家庭部门去释放这个补贴，对吧？通过这个生活的补贴啊，直接把这个现金呢打到你的银行账户里头去。那这个时候呢，就是它形成了这个居民的这个储蓄，然后呢，这个储蓄呢慢慢再转化为这个消费。那所以呢，你看一下海外的经验呢，就是说到2021年、22年的时候呢，其实它有银行的系统里头破天荒出现了2万多亿美元的这个存款，然后呢，这一些存款到现在在1年多之后我们看到呢，这系统里头还有大概超过5000亿、6000亿美元的这样的一个存款在存在。所以呢，如果你现在看一下海外数据它的这个消费的热情它还是非常的旺盛的，所以呢。消费呢，帮助了海外的经济复苏。那我们中国经济呢，其实我们也寄望于就是说消费的复苏，对报复性的消费。那么同时呢，其实这么多年以来，其实我们一直在进行一个结构性的改革，就是说我们要让这个经济的周期性逐渐的去熨平它，对吧？因为如果这个经济只是靠投资的话呢，它的波动性一定会非常非常非常大，对吧？很简单因为这都是上游的强周期的行业。如果呢我们可以增加消费在整个经济结构里头比重的话呢，那么其实消费逐渐的就比重上升的话呢，那么我们经济周期性会下降，那么这个周期的波动性呢也会下降，那么这样的话呢，这个经济的运行起来呢可能会更平稳一些。但是呢我们的这个报复性的消费呢持续了1个季度，然后就突然又好像就是又放缓了。那么这个主要是因为呢，我们看到呢，这个家庭部门呢，它这个收入的增速和它的开销的增速的对比我们看到呢，开销的增速远远的大于收入的增速，同时开销的增速大于收入增速的程度是我看到有数据以来最快的一次，对最快的一次。所以呢，这个也造成了由于可能是可能是收入的压力等等的，那么居民家庭呢，它的杠杆率上升了接近10个百分点，这非常惊人这个应该是我看到有数据以来这个家庭杠杆率上升的最快的一次。疫情呢基本上也结束了，然后呢大家也可以就是说重新的把这个时间和精力呢投入到生产投入到其他的一些就是有这个生产力的工作里头去。但是呢我们看到呢就是消费没有起来这个就是因为我们刚才讲就是疫情期间的过度的消耗这个储蓄以及呢我们看到的这个家庭杠杆率的上升等等等，那么这些呢都导致了我们现在消费的在1个季度的这个火爆之后呢又冷却下来了。那同时呢中国的经济的特点呢跟海外还是不一样，刚才我们讲了就是说它的经济的这个消费的部门或者说家庭消费的部门呢，占整个经济的比重呢还是偏小的，大概呢不到50%，40%几这个也 对应的镜像呢，就是说我们中国家庭的这个储蓄率非常高，因为大家都不消费的，所以呢，这个也导致了，就是说我们这一轮的周期啊，它是有非常有特殊性的。以前周期的复苏，就是说上游强周期的行业复苏，然后呢，这个强势呢逐步传导到中游、下游。但是呢，这一轮呢，就是上游不强，但是下游的消费呢也没有起来，但也不能像以前预期的那样呢，通过这个消费呢去拉动整个经济的增长，所以呢，这个就造成了我们现阶段的挑战吧，它是需要改变，这个格局是需要打破的。
就是打破格局，不能期待这个经济系统的自然演绎，是需要有一个外力的。
是的，对
OK，
就是这个意思。
那么接下来呢，我们想除了消费，您在这个下半年的展望中提到了这个贸易盈余是展示了这个中国制造业还是非常坚韧的，
对，强势。
那么这几年我们一直在听到全球产业链的转移重构。那从疫情期间和今年的这个数据来看，我们是不是对这个命题有点过滤了？对于全球比如说产业链的转移，从中国转移到其他比如说东南亚的其他市场、其他国家。
产业转移它可能是一个比较长的一个过程吧。那其实呢，我们的确也看到了，就是说美国的制造业的这个建设的开支啊，它上升的速度是我看到有史以来最快的，甚至比这个战后这个重建，当然美国没有受到二战的影响啊，所以它可能战后也没有那么多东西要建，但是我们看到就是说现在是美国历史上制造业投资呢它增长最快的一次，所以呢这个数据呢也间接说明了，就是说美国呢它经历了这个疫情之后，或者说海外呢经历疫情之后，不是说我们现在讲的什么脱钩啊，这个其实脱钩是很难的，就他们自己也意识到，而是说呢，就是说这个以前这个系统它只讲效率而不讲安全，对吧？当你只讲效率的时候呢，你把所有的这个流程啊，它全部都搞得没有任何的，就像这个人体里头没有一丝的肥肉啊，你想这你病下来的就很难受，它就一下就把你消耗完了，就这个意思。所以呢，以前只讲效率不讲安全。那么所有的东西就是以效率最大化为原则，而安全置之不顾。那我们也知道，就比如说，就像我们投资也是一样的，有回报，但是你要承担一定的风险。所以呢，你回报越大，风险可不就越大嘛？所以效率越高，回报越大，风险也就越大。那么这个疫情呢，其实就暴露了这样的一个单薄的线性的供应链，而不是说这多面的供应链的最大的这个弱点，就是说这个只要是供应链上的一环崩掉了，那整个供应链就不能够如期运作了。我觉得更多的是反映了对于供应链的重塑吧，就是说对于安全性的追求，对吧？现在尤其是这个疫情暴露了这个供应链的缺陷之后，我们人类社会呢对于安全性的追求这个我相信这一个原因大于所谓的这些脱钩的原因。因此如果我们看一下全球的其他国家对于中国的贸易的赤字，对吧？因为我们中国出口更多所以我们有一个贸易的盈余，他们有一个贸易的赤字。我们看到了美国对华的贸易赤字其实是达到了历史最高的，中国的贸易的盈余是达到历史最高，而且在不断的攀升，对吧？然后呢，我们看到呢，中国的这个如果把央行的这个外汇的储备加上商业银行系统里头的外汇的存款加上等等等，那这些也是达到历史新高了，4万多亿。这个我们至少在供应链的数据上或者在贸易的数据上是没有看到的。
但是全球各个市场越来越注重安全，这也是一个真实存在的另外一个现象，是需要大家注意的啊。那接下来我们再来看这个部分的最后一个问题哈，市场一直在期待这个更大规模的刺激性政策出台。那么我们从债券市场来看呢，去年年底债券市场大跌之后呢，其实今年已经大幅反弹了。那在这样一个刺激性政策存在不确定性，而前期呢债券市场把前面的可能已经跌下来的坑已经慢慢填平的情况下，你怎么看今年剩余时间债券市场的投资价值？
我觉得现在暂时就是说债券还是占优吧，就是说在整个这个配置里头，因为毕竟 对于经济的预期还是比较弱，有关部门呢还没有出手，对吧？那无论是通过这个降息降准呀，还是这个扩表呀，还是其他的一些刺激的方法，比如说消费券呀，对吧？就直接像这个海外一样的印发这个消费券呢，派送到这个居民的手里啊，等等。那暂时我相信现在处于一个观察期，因为你会看到二季度啊，它的 GDP 的增长，我们 GDP 增长还是会比较快的，它一定会快于一季度的，因为去年的基数太低了，就这么简单。所以呢，在这个时候，对啊，你刚刚在一季度进行了这个天量的这个信贷的扩张，然后呢，你M2呢是这个应该是近5年以上最快的一次13%的一个增长，然后呢等等等等，然后呢贸易呢还是相对来说比较红火，然后呢这个一季度呢其实消费也 OK。那所以呢，在这样的大环境下，对吧？那么其实我们可能进入一个窗口期，就是说我们在观察这个前期的政策的效应。那么同时呢，因为二季度呢基数低的话呢，其实它要展示一个好的数据，其实还是相对来说还是简单一点的，对吧？那所以呢，你现在去急急忙忙的去刺激的话，其实可能。对吧？就是这个就值得斟酌了哈，就这个，但是呢，我相信呢，到了3季度哈，就类似于刚才我们讲的2014年的时候，对吧？我们熬了2个季度之后，发现好像还需要一些别的东西，对吧？然后呢，3季度呢我们就开始了。那今天呢，其实我们看到了，就是说央行它对于逆回购利率的下调10个点不多哈，但是它是一个姿态，表明了自己是在密切的关注这个整个这个市场的。那同时呢，过几天这个 MIF 的这个利率呢，如果没有太大意外，应该也会如期的下调的。
OK， 好，我们现在呢，先和这个浩总聊到这儿哈，等一下我们来连线 Monica。在连线之前，简单的了解一下东方汇理。东方汇理是欧洲最大的资产管理机构，最新管理规模 1.9 万亿欧元，折合 14.8 万亿元人民币。东方汇理是一家以研究驱动的资产管理机构。东方汇理也非常重视中国，它将中国作为第2本土市场，在中国拥有汇华理财、农银汇理基金等合资公司。东方汇理同时表示，还会继续探索在中国的机会。Monica 自2001年起一直领导东方汇理策略研究工作，她于2017年被任命为集团研究副主管和全球投资委员会成员，负责制定东方汇理在金融市场上的投资策略。2022年10月，他被任命为研究院的主管。现在 Monica 已经在线上了，我们来连线她。Hi, Monica.
Hi.
Great to have you with us. Yeah. So first, would you please say hi to our audience? Okay. We have Honghao with us. First, please allow me to introduce him a bit. Honghao is a partner and chief economist at the Grow Group, and the latter emerging global investment firm in China. He has previously served as the head of research at Bocom International, as chief global strategist at CICC, and he has worked in the London, New York, and Sydney office of international financial institutions like Citigroup or Morgan Stanley. Notably, he has garnered recognition from both the general public and professional investors. And without any exaggeration, he's quite an influencer in the finance world in China. So I'm really thrilled to have both of you with us. Without further ado, let's dive right into the discussion. So Monica, I want to start with you. Last July, we did an interview with Vincent, and he joined from the Paris office. Vincent told us that it was a super hot day in Paris that day, and the temperature reached 42 Celsius. That is 108 Fahrenheit. At the time, the energy prices were still going on. So lucky us, part of that was behind us. And this brought me to your 2023 Global Market Outlook, which is titled Some Light for Investors After the Storm. Now we are approaching the midpoint of this year. So how have things unfolded compared to your prediction?
Well, let me start saying that I'm connected from Milan. It's extremely chilly. We have 19 degrees, which is really unusual, being mid-June. So starting from the outlook, we said and we thought at that time that there were three main themes that we are going to reiterate in the remainder of the year with different emphasis. Some came out as a confirmation, some others as surprises. So we had the US Fed pivot, which is still taking central stage in the financial markets. We do expect the Fed to pause, and we do not believe that they will cut rates this year. This is a story that will be displayed later in 2024. The second is the Chinese growth path. It was important back at the time we set the outlook for this year, but it's still important now that April and May data are a little bit confusing, but notably China is a very important driver of economic growth, and it will remain on a moderate economic path. The surprise, as you were mentioning, is the energy crisis, because energy prices cool and stabilize at lower level. But at the same time, in particular in Europe, because this was really the hot theme for Europe, we have been able to diversify suppliers and really start moving probably faster towards an energy independence that at this stage is really key crucial for some, in particular for some countries, notably Italy, but also for Germany in the euro area. So when it goes to the economic projections, we've been revising them at global level. We had 2.2 that has been lifted to 2.9 for this year, 2.7, 2.5 next year when it goes to global growth. And this is really coming from different some divergences within the big regions, US, China, and Europe. While when it goes to inflation, we were thinking that some kind of slow moderation would have been in place, and actually this is what is happening. Inflation is stubborn and sticky, but is on a lower trend. Then when it goes to regions, there is a different degree of patience, I would say, if you look at the United States or if you look into Europe. But we do not expect inflation to move down to the 2% target under our forecasting horizon. Having in mind that if these regions commit seriously to the energy transition, some investments and some commodities demand will maintain a higher level of inflation when compared to the central bank's targets. The big surprise came on the equity market that have been performing extremely well, although there is some concentration on some equity indexes, notably the S&P 500 with the tech sector. But volatility has remained overall contained, despite what all was happening on the geopolitical front, on the uncertainty, on the macro development, and on the markets.
Yeah, I think probably Europe behave probably as like falsify many people's assumptions starting in 2022, right? So it is not as bad as expected, right?
Definitely not. And the game changer has been really the energy crisis. So we thought that with much higher gas and oil prices, this would have been quite detrimental for the countries within the region. And thanks to the stabilization to lower level of energy prices, this has not been materializing. Moving forward, having in mind that energy prices will remain contained, thanks to some still alive fiscal support, we do expect some kind of resilience to be maintained into the region.
Okay, so next I want to get to U.S. So how many economists predicted a potential recession in the U.S. even in this year? Also, they have different interpretations of a recession. So could you please share with us your thoughts on the likelihood of a U.S. recession in this year and its potential impact on China market or China's economy?
Yeah, well, I think if a U.S. recession really did eventuate towards the fourth quarter this year, it would be the most broadcasted recession ever. So I think if you look at the consensus in the street, and basically, just about every economist I know is forecasting a recession. And also, if you look at the, for example, the New York Fed's probability of a U.S. recession in the next 12 months, I think it's now higher than 70%. And if you look at history, whenever the recession probability is this high, it's almost no escape that we'll run into a recession later this year. But having said all that, economic data from the U.S. is very strong, right? So it's just exceptional. The job market is showing tremendous tightness in the labor supply, and also the labor compensation. For some reason, despite a very tight market, labor compensation is not growing as fast as we thought it should be, right? So I think that's giving the Fed some leeway. And also, if you look at the inflation level, it's coming down quite fast. And I think going into May, we are likely to see inflation level coming down even faster, because the base effect from last year's Ukraine invasion has disappeared. So then that way, from May onwards, you're probably going to see a faster deceleration of the inflationary trend that was showing itself last year. So all in all, despite a very well broadcasted recession, despite very high probability from the Fed, showing the likelihood of a U.S. recession is quite high, and also despite a yield curve that has been inverted for a long time now, right? But the odds of a U.S. recession is actually residing, right? So, but we're still thinking that, it's possible, because the job market tend to be a lagging indicator, of the economy. Even though the U.S. stock market is very strong now, but, stock market tend to sort of run ahead of itself, especially nowadays, the liquidity in the U.S. system is still abundant, et cetera, et cetera. So, we would say that the odds are lower now, but then, we're still, thinking that we might be entering a shallow recession that, may not feel as bad as many people were fearing before this.
So you mentioned a recession did happen in Q4 this year, it will be the most forecasted recession.
That's right.
And let's get to the mechanism of market reaction. If everybody forecasts there is a recession, does that mitigate the risk, or they talk the recession into truth? So what do you think?
Yeah, the self-fulfilling hypothesis, right? It is possible. I mean, if you think of it this way, right? So last year, U.S. market had a really bad year last year. Both bonds and stocks did really poorly last year. And, because the stock market tend to lead the real economy by, 12, 18 months, you could say that, well, maybe we had the adjustment already, right? Last year, because the stock market is a leading indicator. And also, if you look at the excess saving in the U.S. banking system, we're still talking about 600 billion, well over 600 billion US dollars worth of excess saving in the system that can carry the U.S. consumer into the fourth quarter of this year, right? So then going into next year, because of the U.S. election, the existing president tend to go all out on all sorts of stimulus and spending, right? So because of that, it makes it even less likely to have a U.S. recession, right? So, all in all, it is a tough call for me right now. So, but, because I'm a macro strategist, so for me, it's more about how the market would reflect, what's going to happen down the road. And, to me, the market action is telling me that, we shouldn't be too bearish. We shouldn't be too negative about what's coming in the fourth quarter.
Okay, Monica, what do you think? Do you want to put a number on the likelihood of U.S. recession in this year?
Well, we are almost certain that the recession will materialize. The real question is when, how deep, and for how long. So this is really what eventually is going to matter. So when we think the United States will enter into recession later in the third quarter, and this is going to prosecute into the first and second quarter, likely, of 2024. The recession will come from the tightening in financing and financial conditions, because as Hong was mentioning, the labor market remains overall resilient, and the consumers still show decent level of consumption, although they've been eroding progressively their savings. And, getting 20% interest rates on your credit cards eventually is going to have an effect. When it goes to the market reaction, probably the market won't be disappointed by the recession, but probably from the Fed reaction, because most of market participants, because of the recession, expect the Fed to start cutting rate and again being helpful for the market. I'm inclined to see really the Fed as independent, with not a due date on inflation. So they might temper their action, not to preserve financial stability, but remaining focused on the inflation target. So probably the disappointment might come from the Fed monetary policy and reaction function, the more so on a recession that we expect to be shallow.
Okay, so we talked about the possibility of a recession in the United States that is highly correlated with another factor, inflation. So if inflation in the United States persists at a higher level for longer, do you anticipate other vulnerabilities like that happened in the banking sector in the United States? Monica, what do you think?
Well, just let me qualify a little bit the target we have in mind as projection for inflation. We have a 4.2 this year and 2.6 next year. This is, again, it's data dependent, so you really need to take them with all the carefulness that is needed. So obviously, inflation is going to erode disposable income, and this is not good news for the U.S. consumers. But we think that inflation is something that will be entrenched higher. But you do not have to look at inflation as a monolith, but really look at the component of inflation, PPI, CPI, PCE, unit labor cost. If you drill it down at least at these four pillars, you might be able to invest and to proof your portfolios for inflation. So this is actually what we do. It is true that some sectors, the most interest rate sensitive, real estate, information technology, might suffer because of an higher interest rate. But having said that, there is plenty of opportunity in the real asset space, an alternative asset class that might be displayed and used by investors to preserve the value in their investments and portfolios.
So Monica just talked about we can still find some sectors that can protect us against a sustained higher inflation in the United States. So I was asking, is there any sector in the United States that you find particularly worrying? So like, do you find the commercial real estate particularly problematic?
Yes, I mean, after all, it's a very interest rate sensitive sector, and also because of 10 consecutively hike by the Fed, now the U.S. Fed fund rate is at 5% and above. So even if the Fed would be able to pause for 1 or 2 months, 1 or 2 times of interest rate hike. The problem is that, now the interest rate is substantially higher than before. And also, if you look at the vacancy rate in many of the US commercial buildings, we're seeing very high vacancy rate in many of the major cities, such as San Francisco and New York. Yesterday, I saw a statistics, I think from one of the research, CBRE, one of the research organizations, showing vacancy rate of commercial buildings in San Francisco is even higher than, some of the cities, tier 1 cities in China, which is a huge surprise to me. And I think, besides higher rate and all that, the pandemic actually make people work differently, right? So people now move away from big cities, and also, places like New York and San Francisco, they are notorious for higher state tax, right? So if people move to Texas or Florida, for example, they can get a substantial tax break. So as a result, one should be worried about, commercial real estate. But having said that, I agree with Monica. Monica just said that, some base material, alternative assets, they have good investment value, especially now that, inflation has peaked, even though it's going to be sticky, but it has peaked, and inflation level, inflation growth rate is coming down. The level is still very high, but inflation growth rate is coming down. And therefore, the Fed may be able to have some leeway, right, to maneuver its interest rate policy. And when that happens, we should see like growth asset technology companies, for example, they should outperform, and they're already outperforming, right? So, for example, Apple, as a one of the largest firm in the world, is up 41% this year. It's making new high last night, right? So it's coming out with all this, highly anticipated gadgets for consumers. So I would say that, because of that, because of the interest rate level might have reached a very high plateau and may be able to come down later on this year, because technology is still changing people's life and it's making breakthroughs such as AI technology. And also, if you look at the earnings season, for this earnings season, more than 70% of the US listed firms actually beat and raise expectation, right? So it's substantial, right? And I think that in part explain why the US market is so strong. So yeah, so I think, me and Monica are on the same page, in the sense that, we have alternative assets, growth technology assets, and also, some commodities, and maybe come back in favor after this year.
Okay, so that's quite helpful. Next, I want to bring the topic back to Q4 last year, and both of you predicted a economic recovery in China, and now we are halfway through, so uncertainty remains high. So Honghao, in your second half market outlook, you mentioned the need for large-scale stimulation in China, and I was wondering what could be the signals that would eventually motivate regulators to implement the stimulation?
Yeah, I think in the second quarter, in the up and coming second quarter results, we're still going to see, relatively high GDP growth rate. The second quarter GDP growth is probably going to be higher than the first quarter because of low base effect. So, if you roll out a huge stimulus package, you may not be able to easily justify such a huge package. But, once we get into the later this year, once, the stimulative effect from the earlier policy sort of wear off, then, you will see some slowdown especially in the consumer sector, right? So, because the housing sector is not doing well, consumer very busy saving money rather than spending it, et cetera, et cetera. So I would say that, if consumption, for example, total retail sales growth continue to trend down, and then at the same time, if home sales in, many of the cities continue to trend down, and at the same time, real estate investments, they're still where it is right now, it's like minus 5%, then it calls for stimulus help from the government. I think for now, more and more, I can see that more and more economists in the market sort of coming around. But I would say that if this time, we continue to stimulate the real estate sector, the property sector, it may not help as much as before, because the Chinese households has bought like so much properties you wouldn't believe, right? So 70% of the Chinese households as allocation is in property, right? So if you continue to pump this sector, it could actually skew, the entire economy further away, from what it should be, the right path where it should be. So instead, I would say that if we do come up with some stimulus package, it will be so much better off in the form of, help to the consumer, for example, like what the overseas countries experience, right? So the government actually hand out cash or coupon to households, to help them to spend. And that way, using consumption and the household department as the driver for economic recovery, rather than, the old recipe, you stimulate investment, stimulate property, and therefore, we end up with huge excess capacity later on.
Okay, in theory, that sounds so, feasible, right?
In theory.
But
That's right.
how practical it is for it to happen in China?
Yeah, very good question. I think not practical. Right? So I'm saying it, but I don't think the likelihood is that high. I think we're still, trying to stimulate the older part of the economy. And to be sure, I mean, that's the quickest way. Right. So once you start doing that, then, you see signs of life coming back very, very quickly. But, looking at it from a longer term perspective, it may not be the right recipe at this juncture.
That's very helpful. Monica, in your monthly outlook, you expressed a particularly positive view over China compared to other markets. Could you elaborate on your comparative optimism?
Yes, well, first of all, let me give you a little bit of long-term framework. China has entered a transformation of its economic growth model towards a more balanced, fair, and equal growth that, in our opinion, will be more sustainable over time. So when you enter such a transformation, it might happen that you have a short-term fluctuations, and this is what we are seeing. So in terms of numbers, we have a 5.7 economic growth projection for this year, that when compared to the official target set by the government, 5% is in the upper bound. And this is explaining why we are constructive on the region. Then there are obviously some critical aspects, namely youth unemployment, the real estate, and consumer confidence. So when it goes to the policy support, it will be really an exercise to balance between the 5% target, and we really think they will overshoot these targets, and maintain and preserve at least these three layers within the economic trend. Having said that, there is an appeal when it goes to valuation, in particular onshore, and in relative terms, there is a growth premium that is there, and that will offer appeal to the investors. Having in mind that you cannot get rid of tactical fluctuation when you enter such a big transformation in the economy.
Okay, that's quite helpful. Well, if we compare the sentiment of global investors with that in domestic investors, how do you believe global investors are more pessimistic or optimistic at this point toward China?
I can't speak for the global investors because I'm based in China. But from my interaction with them, and also hearing from Monica just now, I actually think that, global investors are probably more optimistic than many of the domestic investors that I've met. I think many of them are very bogged down by, the recent weakness in economic data. And as you can see, like if you look at the Chinese newspaper, it's infested with negative headlines, right? So, but then when I talk to global investors, I tend to get a sense of optimism. I think it's because the global investors, they tend to have a longer term view, right? So if you think that, China will continue to grow, it will continue to be one of the important growth engines of the world, then one shouldn't be too pessimistic. But you have to ride out the short-term difficulties so that you can get to the long term. So I think, that's one of the reasons why we have sort of two different sentiments. For the domestic guys, they seem to be unconsolable. But then, with the global guys, they tend to be more upbeat, more optimistic.
And also, I think probably a comparative perspective also helps, Monica, right? Because there is no perfect place in the world at this point, right?
Yes, true. But maybe what we can say is that there is this domestic bias pessimism that is featuring everyone. But from a global perspective, really, what you have to look at is the long-term horizon, the long-term structural theme that is there, the potential for diversification, and the potential for higher returns. And I think that under this perspective, really, this is making the case study for China, which doesn't mean that you don't have to fine-tune and articulate your risk exposure to the region, but you can always play and position on the currency, on the fixed income, on the equity, and fine-tuning the size of your exposure. And this is basically what we are doing.
Okay, so that's very helpful. Next, I want to get to some long-term trends. And Monica, I heard from another news media, probably Bloomberg, that legendary investor Stanley Druckenmiller reviewed that AI-related stock now dominated his long portfolio. So do you think we are entering another round of technological revolution? And how should investors prepare for it?
I don't think that we are in a technological revolution, because it's under our eyes already. Then you need to distinguish artificial intelligence, what we mean and what kind of models we are using. We are using artificial intelligence in our econometrics efforts on the machine learning to crunch big data. Think about COVID, for example. At that time, GDP projection were unreliable, not informative. So we really had to look at big data on micro and high frequency, and machine learning was extremely helpful on that front. We are using it for textual, for translation, and is super powerful. Having said that, when it goes to forecast, it's less evident, the power of this artificial intelligence. So you really need to look at it carefully, having strong fundamentals on your background in order also to distill all the amount of information that is coming out from this super powerful engine. But for some, type of jobs that are repeating themselves, this might be definitely quite useful. Whether we will have productivity gains, inflation, and we can solve the demographic issue, it's in progress. This I cannot give you a definitive answer, but this is what we're currently focusing on the moment.
Okay, so it's always helpful to be disciplined and to get down to the fundamentals, right? Hong, let's get to China. So in a market largely driven by retail investors, we have witnessed countless long-term trends be treated as short-term fashions. So given that, how should investors positioning themselves for these long-term trends?
There are many long-term trends, though. The demographic obviously is slowing, right? So, there are only 683 million, 6.83 million couple got married last year. So I think it's going to heralding a new level of low birth rate, some year down the track. So, it's concerning. But then at the same time, we're seeing AI technology breakthrough, as Monica said, it's actually changing the way we are investing our money, right? So it's changing how we analyze market data and how we allocate our assets across the globe. So, I would say that, there are many opportunities, but then at the same time, there are like longer term threats as well. So I think for the Chinese market, right? So if you look at the transaction volume in the Chinese market, it's actually the most active market in the world. So we trade about, 1 to 1.5 trillion yuan worth of stocks every day, right? So it's just phenomenal. In such a market where, people generate value by actively trade the market rather than by investing in good companies, hold it for the longer term and grow with the company. It's two different sort of philosophy to invest. Right? So in the more developed market, for example, in the US, we have Warren Buffett. He is able to hold on to his position for like decades. And, here in China, we may have trouble holding on to our position for like 10 days, right? 10 hours. So it is entirely different. And I think, it takes time, because the Chinese market is still very young. It's like 30 years old, right? So many of the retail investors, they are treating the stock market as a casino, right? So they sort of gamble, speculate, trying to outwit their trading opponents so that they can, make some money out of it. But it is just really a wrong way of doing it, right? Because, by trading to create value, basically it will wear you down over the long run, because you can't promise, you can't make sure that you are always smarter than your opponent, right? So there's, always be, one of these days you got beaten up. So, it is hard. It takes a long time to educate. And I think already after 30 years, in the making, we already substantially, than the early days, say in the early 90s, right? So stocks can go up like 50% in a day. And I think that is one of the reasons, speculative fervor was so prevalent back then, that, we come up with a limit stop, on a daily limit stop on trading, right? So now that we can only go up 10% a day, et cetera, et cetera. So I think things are changing. People are getting educated over time, but it takes time. So I think to truly grasp the longer term secular trend, people need to change their mindset. We need to change how we educate our people. We need to change how we punish, wrongdoers in the market, irregular trading behaviors in the market, deceit, all sorts of, stock trading criminals and all that. So to protect investors for the longer term investment horizon. So then that way, I believe that over time, things are bound to change. And already, like say, for example, the Chinese funds management industry has grown tremendously in the past couple of years. All right, so now the size of the mutual fund and also the privately managed fund has reached well over tens of trillions of yuan already. All right, so it's a major force in the market. And as the market gets more and more institutionalized, I think it's bound to get more regulated, and therefore, people will be positioning for the longer term investment opportunities.
Well, that's a very helpful, thorough analysis. So it calls for action from all sides to build a healthy capital market and for the investor to be better protected. But, well, let's first answer the simple question. So for normal investors, individual investors, to avoid overpaying for the hypes, should we just avoid all the thematic things in the market or just stay put?
I would say that AI is a genuine opportunity for the longer term, right? So it really changed the way we work. It changed the way how we make a living. So, it's a genuine change in the society, and we can actually sense it happen, right? So, as you use ChatGPT, you can feel how powerful it is. So, I think, people, when you say hypes, all sort of bubbles, for example, back in 2000s, the internet bubble, right? So it starts with hype, right? So all this internet, all the computers connect together, and then you get all sorts of information. And now we're in a second revolution of the computer industry. So I think people should participate, but then at the same time, we want to make sure that we don't sort of overpay for the secular opportunities. And therefore, I think for ordinary investors, they can consult with professionals such as Monica, to get more professional ideas about, how best to go forward.
Okay, that's very helpful. And speaking of ChatGPT and the power of generative AI, I have a confession to make, and I use ChatGPT to help me generate part of the question list to you guys. So that is my confession. It's definitely, and I'm seeing it replacing part of my job in the near future. Probably it is happening. So Monica, do you think AI will replace part of a strategist job in the next decade, and which part will be replaced?
I think it will replace most of the data crunching and all the recurrent job that we have to do. It can definitely help us distilling information out of big data, but also on big. It can also help us in wrapping long readings in major points. And I confess that I did it. Then, because I'm a little bit seasoned, I went back to the full report just to make sure that ChatGPT was doing the right job. So to this extent, definitely, it will be extremely helpful. But as I was saying, it is really important that eventually you supervise and you control the output of ChatGPT or artificial intelligence in order really to make sure that you are not relying on fake information. The quality of data is really important. So it is something that we sometimes underestimate, but data analysis and data scientists are tremendously important, because you can feed the computer with very long time series, but if data quality is not secured, you might terrible and wrong conclusions. So it helps, it will help, but it needs to be supervised.
Okay, that's very helpful. And Honghao, I believe there is probably one distinct feature of your research report that can hardly be replaced by AI. As I think people investing in China are pretty familiar that you always have some philosophic reflection on humanity contained in your report, which is very unique. Can you share with us, do you think a philosophic angle can provide insights on how the market is moving in the short term or probably even in the long term?
Yeah, thanks for such a generous comment. I think, because I worked in sell side for a long time. So, and also, nowadays the sell side research in China is so highly competitive, right? So you have to differentiate yourself. And I think, because I've worked in a Western market before, and as well as the Chinese market and Hong Kong market, I try to combine different perspectives together. So I think a philosophical way or a philosophical approach to to analyze investment situation and problems, it gives you a better perspective, right? So it moves beyond just data analysis, charting, and all that, because data, we all have access to data. And I'm pretty sure that, some of the quantitative analysts, they probably are more adept, to do data analysis than me. I'm an old timer. But I think, bringing your game to a new higher level actually makes you see the entire picture more clearly. And also I make sure that I talk to, top rated investment professionals as much as possible, so that to get their perspectives as well. So now that I am, managing some of the institution money here in Hong Kong, I found it particularly useful to combine different perspectives and also a buy side and a sell side approach, to analyze, the investment situation. So I think in 2022, it was a unique year in the sense that, both bonds and stocks are plunging together, right? So it hasn't happened for the past 40 years. And so if you use the old model, if you use the old mentality to analyze the situation, one of the obvious conclusion you could draw is that you would put all your money into the bonds because it's safer, right? Historically speaking. But, that's precisely the wrong place to put it, because last year US bonds did even worse than the US stocks, right? So I think, for a unique situation such as this, where you can't rely on past history as guidance for forward results, then you have to rise above the existing game, and bring in different perspective to better analyze the situation.
That's very helpful. And you know what? It makes me feel much better because I studied philosophy at a graduate school. I remember the first day, so I entered the graduate school. A PhD student told me philosophy can only be useful when you are not doing philosophy. It seems to be proved by you. So we've covered lots of ground. And next, I want you two to take over. Would you please each ask the other guests 2 questions? Honghao, let's start with you. What's your first question for Monica?
I would ask for Monica's perspective on China. I know that Monica has touched upon China just now, but I think from a global investor perspective, what is stopping you from allocating more capital, towards, this part of the world? And that would be my first question. And the reason why I ask you, is that, even though China and the Hong Kong market, and Chinese Asia and Chinese X share in Hong Kong had a really good rally, in the first quarter this year, but somehow the gain is vaporizing for some reason. All right. So when I talk to, some of, if you look at the data, right? So what data is showing me is that as the market rising in Hong Kong, for example, foreign investors are actually offloading their positions. All right, so it's concerning. So I would like to ask, why such a phenomenon is happening, and what is stopping global investors such as yourself from putting more money into the Chinese market?
I think it's always a matter of risk budgeting and really to temper the expected return and the risk that you are paying down for that specific asset class in a perspective of global diversification. So what we saw is that if I look back over the last 10 years, it will be impossible to get similar return and risk being allocated primarily to domestic market as we were. So moving forward, for sure, we will allocate a greater portion of our asset allocation towards emerging markets in general and possibly China, just because I'm thinking about India, for example. If I look at our capital market assumption, which set the expected returns for the next 10 years, India and China are the 2 countries, regions that are leading in terms of expected return. But then you always have to compile the asset allocation, having in mind the risk. So I would say that what has been true over the last 10, 20 years won't necessarily be true in the coming 10 years, because we are seeing some revolution, not only in the technological space, but also on the geopolitical, political, economic trends. And under this light, definitely the proportion that will be allocated in an asset allocation portfolio to emerging market will definitely be higher.
So Monica, what do you want to ask Honghao?
Well, I've been mentioning this economic transition that China entered, targeting this 2030 growth target with more sustainable and fair growth. Do you think there are specific sectors we should focus on when investing in China under this spotlight?
Yeah. Inclusive growth. I think that's the sort of the new mantra for the next 20 years. And I think, I think, just now I mentioned that, because the consumption, the household department is such a small part of Chinese economy, right? So in the Western economies, for example, in the US, the household sector is about 70-80%, right? So of the economy. I think in China it's less than 50%. And I think that is, the reason why it was because, the labor compensation as a percentage of total GDP is very, very low, right? So it's one of the lowest, if you compare to other countries that is at the same development level as China, right? So as a result, people didn't have enough to spend, so they tried to save more, and also the social safety net is not well developed as as some of the Western societies. So I think as a result, you see extremely high saving rate, low consumption, etc., etc. So I think, going forward, inclusive growth calls for better redistribution of the economic developments, the fruits from the economic development across society. So for example, if you look at some of the Chinese numbers, right? So for example, now only like I think it's like less than 80 million people paying income tax in China. So it is just odd. And also, if you look at, some of the higher paying Chinese workers, it's very easy for them, for their salary to hit the highest income tax bracket, right? So therefore, your take home pay, your disposable income, tend to be substantially less than what it should be. So as a result, people don't spend. So I think inclusive growth call for better redistribution. And I think that calls for a sort of a income tax reform, a social security reform, a healthcare reform, and how the importance of the household sector will change in the overall Chinese economy. So I think as a result, we already seen the direction is being set by the top. So I think going forward, the consumption sector, especially the staple sector, is going to be even more important. I think besides that, many of the manufacturing industries that China is, having some sort of a comparative advantage, is now doing exceedingly well. For example, the electric car industry, right? So the Chinese electric car industry is exporting more cars than some of the Japanese maker now, and also the US maker now. And also, the Chinese semiconductor industry, after years of dormant, now they sort of woken up to the reality. So, China is probably going to put more money into R&D to develop its own semiconductor industry. So, there are many things that many opportunities are in this part of the world. I think the average age of the Chinese population is about 41 years old. It's slightly older than the US population, but we're still in a sort of prime age to produce, to innovate, to develop. So, let's hope that, the top will set us in the right direction, and the growth going forward will be more inclusive, more fair, and therefore, the economic structure can be more balanced.
Monica, do you want to ask you a second question as well?
Yeah, probably. Given that we are now penciling the outlook for the second half of the year, what might be the greatest surprise for investors on China that has not been priced in by the market yet?
I think the stimulus that we talked about just now, most people don't believe it, right? So, or most people would believe that, even though if there could be a stimulus, it could be in the same old form of trying to stimulate infrastructure spending, manufacturing sector and the property sector. So I think as a result, even though the stimulus such as this can produce some fleeting effect on the economy, a stimulative effect on the economy, it won't last. So I think that's why if you look at Hong Kong, both the Hong Kong H-share index, also the A-share index, they are weakish, right? So they are innovating. They are not doing much, right? So every day we're stuck in a very narrow range. And also the trading volume in Hong Kong is actually drying up. So I think, what could be a surprise is that, if China does, a stimulus as I discussed just now, right? So, we send out consumption coupon to Chinese households. We try to stimulate the Chinese household sector rather than, stimulate the property sector, the investment sector. Then that way it would be a genuine surprise. And I think it would be a start, the inception of a longer term structural reform in China. But I think right now, even including myself, I think it's a lower probability event.
Okay, Honghao, do you want to ask your last question for Monica?
Yes. Monica, as we're living in an entirely different world now. So as an investor, right? So the global market that we used to know is no longer exists or, has changed substantially. So I think as a global investor, what would be your advice, to the investors today, to deal with such sort of a dichotomy between the West and the East?
Well, what we did on our side is really to try to size the political and geopolitical risk as one of the components you need to take into consideration when you are assessing an asset class. So you have the economic backdrop, you have the valuation, you have the technicals, as well as this geopolitical risk premium that is something eventually entrenched in the assessment and diagnosis that you need to run when making your investment choices. Having said that, there is really a lot of noise and not necessarily rational behavior into the market. So our advice is really to detect what might be the structural theme, Chinese growth, US monetary policy, and try to stick to that, maintaining coherence and discipline in the investment case, and then to navigate the fluctuation of the market, but having clear in mind some key structural themes might be very helpful. Having in mind that the way we are assessing asset classes has been evolving over time with new components.
Okay.
Great.
So well, that's very helpful. Thank you both. And that's what we have for this session. Given the time, we'll have a really quick question session. So first, what's your top risk to watch for the rest of 2022? Monica?
Geopolitical risk and growth, in particular in the United States. Understanding the right dynamic.
Yeah, very similar to Monica's risk assessment. And I think, hopefully Chinese growth will recover and the US doesn't go into recession. Well, that would be like the best case scenario. But I think the likelihood of such combination is quite low.
Okay, so what could be the safe haven for this year, Monica?
Very difficult. Probably gold.
Okay.
Yes, actually, once again, it coincides with my view. I've been advocating buying gold, because real interest rates coming down, and therefore, gold can be a really good real asset to have. And also, gold has a lesser correlation between gold and the other traditional assets. That makes gold a good candidate in such a volatile environment.
Okay, so I ask two more casual questions and I will let you go. So what is the one lesson you learned that you wish you have known earlier, Monica?
Probably being faster in adapt to these structural changes that are taking place in the markets, in the forecasts.
Okay, Honghao.
Yeah. I think pay more attention to the external accounts of different countries. For example, China's current account and capital account and how they change actually signal, much bigger things, much bigger change that is happening. And also the relationship between China and the US is becoming even more important, not less important, right? So we had a really good, 20 years of, global supply chain, that is, help lowering the living cost for everybody. But I think now we enter in a new era where, we have to monitor, how this all important relationship are going to develop in the future.
So that's what we have for today. Thank you both very much. This is so interesting. I enjoyed a lot. I hope you enjoyed as much as I did. Thank you both. Enjoy the rest of your day.
Great talking to you.
Thank you. Thank you. Thank you for this amazing opportunity. Bye.